Hello and welcome to day 4 of IPAW. I'm Andrew Wibberley, one of the co-chairs of the IPTF, and I'm looking forward to hosting the next hour of stellar content we've got lined up. First though, thank you to everyone who's got involved with the week already. And if you have missed anything, a reminder that we'll release a catch-up version and you'll find tons of resources on our website, iptf.co.uk. You can also catch up with what points resonated with people by searching using the hashtag IPAW2024 on LinkedIn and Instagram. And speaking of those hashtags, why not use them to post about the items that grab your interest today? We've got another packed hour ahead today, with sessions digging into some of the more technical detail that underpins the IP proposition. This is being done aware of the reality that for all of the positives we talk about with IP, there are of course perceived challenges. So with that in mind, today we have sessions on business protection, managing difficult client conversations, and how to ensure a smooth claims journey. Before we get stuck into today's session though, we're going to take a look, as we have done each day this week, at some research which supports what we're doing at the IPTF and more importantly, highlights the real need for all of us to do so. We've quoted the FCA Financial Lives Survey in previous years, and the annual update to the research is useful in highlighting the impacts of financial concerns on people's health. The most recent release shows that 20% of adults admit to suffering with their mental health over the past 12 months because of concerns over money. And that's really the point, isn't it? Even when life ticks by without incident, finances still cause people concern. So what happens if the income stops? It's easy to see how easily people can find themselves struggling to cope. And all of that is without considering the added costs of something unexpected happening. Guardian's research this year with Young Lives with Cancer highlighted just how quickly the extra costs of being ill can add up, as the graphic on screen shows. Referring to cancer specifically, their research found that having cancer adds almost £700 a month to outgoings for young cancer patients and their families. The majority also suffer a loss of income and earnings as a result of reducing hours or taking time off for treatment, and for almost a third, this loss of income and earnings was £10,000 or more. Nearly a third of households said that at least one of the adults had to stop work entirely following the young person's cancer diagnosis. Now, income shocks come in all shapes and sizes, and when we least expect them. But that's why we're here, because knowing about income protection and how it can support your client means you can offer them an alternative to having to deal with the impact of an unexpected loss of income. Of course, the impact of income shock isn't just felt by an individual and their family, it can affect business as well. That's why we're going to spend our first session today looking beyond personal IP to look at the opportunities and challenges presented by IP to protect businesses. I'm delighted to be joined today by 3 experts with different perspectives on this subject. Nathaniel Lee, owner of Business Protected, Louise Newnham, an advisor at SPF, and Chris Blyth, MD at Protect 365. Before we get into the questions, guys, can you just give a bit more than your job titles about what you do at those places and a bit of background to yourselves? Nathaniel?
I'm Nathaniel, Managing Director of Business Protected. We help SMEs with group and individual protection policies.
I'm Louise at SPF, private clients. We're a financial advisory firm, so we work with mortgage brokers, we've got protection, insurance, and I help clients with their overall protection planning.
I'm Chris at Protect 365. Our business is mainly private medical and also business protection.
Brilliant. Thanks, guys. So we're going to crack straight in, starting with you, Louise. So you work for a company, SPF, which does both business and individual clients. So I'm interested where possibly someone comes in on the individual side and how you spot an opportunity that might be broader than they originally think. What kind of things do you look for and how do you manage that conversation?
Well, all of my clients come from mortgage brokers, and we have a bit of a handover anyway. So we have a lot of their information. We know how they're employed, if they've got a limited company, that sort of thing. So I think it's just about asking the right questions. Predominantly they're referred over for their mortgage. It's normally a residential mortgage, so it would usually be personal protection. But it's just about asking the right questions. About what they do, how their company's set up, do they have other directors in there, just spotting the opportunity from there really.
That's great. Thank you. And Chris, for you, that kind of start of the journey is quite different, right? So you mentioned you do quite a lot of PMI. So how does that link kind of flow for you?
Yeah, so we get a lot of traction with clients coming through on private medical, and then it's just asking those questions. Do you have anything else in place? And a lot of time, a lot of business owners will just not have anything. So then we'll start a conversation around things like protecting your income, because I think business owners don't realise that actually it's them, and if they cannot work, if they're ill, then their income stops. So it's just about bringing that to the forefront for them.
Yeah. And Nathaniel, so you don't have, I guess, people with mortgages or people who are interested in PMI at the start, or do you? How do your leads work?
We get them from quite a few different avenues. So we do work with quite a few mortgage brokerages because we're in the PMS referral panel. But we also go out to a lot of professional introducers, so IFAs, accountants, solicitors, R&D tax credit advisors, all sorts of avenues. And we just add that extra string to their bow.
Can you talk a bit more about how you develop those relationships, how you convince? I know I don't want to spend 15 minutes talking about signposting and leads, but obviously that's, you've done a good job of building that. So what do you reflect on as the successes there?
I think probably the best success is just making sure that you start with people who you know really well. So starting with your own accountant and making sure that they understand positioning for business protection, to make sure that they're having those really good conversations, because the leads that convert best for us are the ones that know why they're having the conversation in the first place. So really spending time with those professional introducers, making sure that they understand why they're doing it, how it benefits them and their clients, and how to best position that is the most important thing, I would say.
So maybe Louise, when you have a client where that need's begun to be established, how do you start to convince someone of the need for their business? What kind of language do you use, or how does that conversation proceed typically for you?
I mean, I think it's about kind of letting them see the need. So rather than you telling them what they need, you just ask them the questions. What would be the impact if you are unable to work? What would be the impact to the business? What would be the income? The impact to your personal outgoings. I think it's just all about asking the right questions and letting them kind of tell you what they need, really.
Yeah. For you, Chris?
Yeah, very similar. It's about taking the client to the point of just asking those questions of, what happens if you couldn't go to work for, what happens after 6 months, 12 months? What does that look like financially for the business, for the family? And then it's getting the client to realise, actually, I do need something in place. So is there, just reflecting on the answer there, is there a specific time in a kind of business journey where you see there being, I guess, more awareness or willingness to engage with this? Is it at startup, or is it, when they're starting to recruit more people? Or
I think there's definitely some policies that are more appropriate throughout the business cycle. So shareholder being one that's not particularly appropriate early on, because there's usually not a demonstrable value. But I think as soon as you're out of that first year and you've got your personal tax return, you can show that your income is there. That's when the executive income protection conversation would start. And I think unless the business has grown to a point where it's of a size that it doesn't really have key people anymore, key person cover is almost always a conversation from startup throughout until that point when they've hit critical mass. And it could be that key person income protection is really important, because without that head salesperson, they're going to lose a huge amount of gross profit. And
in terms of, Nathaniel, you mentioned the politely put esoteric language, which is a very insurance phrase in and of itself. But for you guys acting as translators, what are kind of the key things, key examples or words that you would use to make that connection or come to you first?
So I try and split it into 4 categories really. So it's succession planning instead of shareholder protection, because they understand that they need to make a decision about the business, whether that's selling it or running to retirement and winding up, whatever that looks like. They need to know that there's a plan in place. So having shareholder protection where appropriate is really important. Continuity planning is what we use for key person cover, because making sure that the business can continue in its darkest days is super important. Neglecting staff benefits is quite often, when you're growing, is a recipe for disaster, because you can recruit the right people, but you might not retain them. So recruitment and retention is a term that we use. And then just making sure that you're using the tax efficiencies of having a limited company and putting your own personal cover through it is another one.
Any of those familiar with you? Or, I mean, feel free to steal all of Nathaniel's ideas.
No, I think I might. No, I think, again, it's just, it's that language with a client is like, if something bad does happen to a director or a shareholder, what actually do you want to happen? Is the capital there to keep control of the business? If there's not, then we can put something in place to ensure that happens. And again, if you've got somebody, top salesperson or key account manager, if they were to leave your business for another competitor, what does that look like? It can be very difficult. So it's, well, what happens if that person were to die? What does that mean cash flow wise to the business? Are you going to be able to survive? So it's just keeping it really, really simple, and people kind of switch on to that.
Thank you. So I'll come to you all on this, but I guess I'm interested. So we're sitting here today on a Thursday talking about the technical, difficult things around income protection and business income protection. We're as guilty as everyone of kind of throwing it into this slightly more complicated pile. I guess 2 questions from your perspective. Is it more complicated than individual? And if so, how did you learn enough about it, train yourselves, or what kind of advice would you give us to good sources of?
I think it certainly seems scarier than it is.
Yeah.
I mean, whereas before I didn't do an awful lot of business protection, but since joining SPF, I've done it a lot more, and it can seem a bit daunting because I suppose it's a bit different, but it's more or less the same thing, especially when you look at relevant life insurance, income protection. I think once you get comfortable talking about it, you understand how it works, you understand the compliance process and and everything behind it. Once you've done it a couple of times, it's really not that complicated at all. Yeah.
Chris, do you want to tell me it's incredibly complicated and
It can seem really daunting when you look at it, and again the language around it, things like executive income protection, it does kind of put people off and think, well, what is it? But fundamentally, it's the same product, the same foundations as income protection. It's just written slightly different, and there's slightly different evidence there. So once you get your head around that, it makes a massive difference, and you can have that confidence. But what I will always say is just lean on your BDMs, because they will be able to talk you through the product. They're more than happy to sit with you for an hour and just explain it. And again, after an hour, if you don't fully understand it, book another session in. And just keep doing that. And then once you've become an expert in it, then you can have that confidence and speak to business owners about it.
Yeah, and just metaphorically, there's 15 odd BDMs clamouring at the door to get in here or to get down the screen to people there. So, I think definitely in the next 2 weeks after you see this, then they'll be very happy to talk to you about that. Anything else from your side, Nathaniel? Obviously, you kind of, with your entire focus.
Yeah. I think, just echoing what the guys have said, it's once you've got your head around it, it is pretty much like any other policy. Obviously, you've got to look at whether it's key person, executive, and you've got to think about things like the tax position and whether you're covering pension or what percentage of gross profit you're looking at or whatnot. Or if you're looking at group income protection, that can be really useful, because if you've got a big enough team and they all need it, it can actually be much easier than all of the other income protection policies that we do.
Yeah, that's interesting. And from your side, Nathaniel, but happy for others to jump in. When you're selling something, let's say exec IP, and when you're discussing that with a client, if there's a blocker along the way, are the techniques to kind of convince them similar to personal, or are there different things that you'd bring into that conversation from this perspective? I
think with all business protection, it's well, let me start there again. I think for all protection, it's an emotional decision. A lot of it's just backed up by logical arguments. And I think probably for business protection, it's just that little bit less emotional and a little bit more logical, because there's that extra bit in the middle, which is the business. So I think where we see a fair bit of success is just objection handling before it even becomes an objection. So filling the client with enough information and reasons to do it that there isn't, unless they don't actually want the product in the first place, and we've discovered that during the fact find, there isn't really a reason why they would push back on it. It's more about which one of the options, what deferred period, how much, is it short term or whatnot. So I think it's about heading off those issues before they arise.
Very nicely put.
Yeah. Can I ask a question about value-add services and exec IP? And I have no idea of the answer, right? That's why I'm asking the question. But does it play any stronger into an exec IP sale, or not really? It's still a person. And I guess I'm intrigued whether with PMI and group schemes or things like that might exist alongside this, whether those things play more or less. But
I think one thing that's quite handy is LV's business care, especially for new businesses when they're looking at protection planning. That's certainly proven quite useful, and something that clients like, because they can just pick up the phone. They've got that free advice on VAT, legal stuff. That's definitely helpful for that sort of thing.
Yeah, I agree. I think it's also quite useful where the value-added service isn't necessarily just for the individual, but for the business itself. I know Aegon's not with us anymore. Sounds like they've died, but I think really was useful was the recruitment service that they had and things like that. Just on the previous question as well, I think one thing that I forgot to mention is convertibility. With Relevant Life, you've got the option to change that into a personal plan, and I understand that that's a fairly straightforward life insurance plan in the tax wrapper. Whereas executive income protection, especially, has got pension, NI, and whatnot. So it might be impossible. But from memory, Aegon allowed that. So it would be useful to have those new entrants or the incumbents to have that convertibility. Because some people, they are running a one-man, one-woman band, and then they shut their company, and things might have changed and they might not be able to get IP anymore.
Thank you. One last question. On group, so you mentioned group IP, and obviously basically we don't have time to do group IP justice, but I'm interested in how you kind of decide whether or not to discuss that as well within this.
Yeah, of course.
I guess as I'm showing here, I can imagine there's kind of that risk that you confuse the person you're talking to by bringing that in. So how do you decide whether or not to...
you definitely can, because there's so many different options. It can become so overwhelming for clients. But I think early on in the fact find, understanding what that company's trajectory is. Are they looking to exit in a few years? Are they looking to grow massively? We had a client earlier in the year, when we first talked to them, they only had 5 employees, and they said by the summer it will be 12, and then by the end of the year it'll be 30. So if we were going to do that, it was in the contract that they had to have income protection. If we did that every single time and we did a new executive income protection plan, there's probably going to be someone in there that we can't get cover for, because there's only, at time of filming, 2 insurers. So giving them the option and talking about free cover limits and the benefit there is really useful. And sometimes it can be quite a lot cheaper than doing individual quotes. But then you've got to sort of play the other side of the coin and say, look, well, actually that could be that it's going to grow quite rapidly in premium in the future. So it's just talking about the pros and cons, and that's the same for death in service, group kick, and whatnot, just so that they know, okay, we can do it this way, we could do it that way. For our business, it makes most sense to do that one.
Cool. Thank you all. Thank you very much. It's been a really interesting session, so thanks for your time. And next up, we have a session from Kathryn Knowles. Kathryn has done a wealth of incredible things around the industry, including a relentless drive to improve opportunities for protection for people with pre-existing medical conditions and hazardous or exciting jobs and hobbies. She's also developed a training program for advisors, and here is going to share some of her key ideas for handling those challenging conversations that come up with clients, particularly around income protection.
Thank you, Andrew. It's really lovely to be here with everybody, and I'm going to give you some general tips to start off with in terms of the income protection conversations and how we can try and help ourselves and help our clients to really see the importance of this type of cover, and how to really address things when things don't necessarily go as planned when we're going through the application and maybe we're having our client conversations. So the first thing that I always like to say to advisors is just don't beat yourself up. You are not going to convert everybody. Lots of people automatically think of life insurance. It's the grown-up thing to do. You get older, you get life insurance. It's what a lot of the generations before us have done. And income protection isn't something that's necessarily been a standard across society in a sense that people take out. So hearing about it does seem a little bit different. And people can obviously as well, they get a bit confused by what it is. They'll sometimes think it is to do with unemployment cover, redundancy cover, things like that, rather than it being to do mainly with the health factors side of things. But say you're not going to convert everybody at all, because you are going to be doing brilliant recommendations, but sometimes people, they just don't want to take out that kind of insurance. They really don't see the need for it. And as an advisor, we will see the need for it and we can explain that need to people, but also bear in mind that we can't scaremonger people as well. So if somebody's not really understanding what you're saying to them, you can't then start going into like really disaster scenarios. I mean, give a little bit of an indication of, well, if this happens, you know, how would you cope financially? But there is a point where we have to go, do you know what, this is starting to take it a bit step too far, and I can't be using that kind of disaster scenario. Another key tip when you're doing things like income protection is to make sure you're going through at least the core bits of those questions in the application from the start. The last thing you want to do is say to somebody, I think it's going to be £15 per month, let's do the application. And then you find out actually after the application has gone ahead it's £30 per month. Or maybe the insurer you've done it with is £30 a month, but someone else might have been the £15 a month. It's just a psychological thing as well. If somebody were to say to me, oh, it's this price, and then the next thing it doubles, I'm like, I don't want that. You know, it's kind of like this is what you could have won if you weren't this ill, which is really not a pleasant situation to be facing at all. And I've personally faced that myself, so I know it isn't a nice thing to have. But if you'd said £30 a month to me from the start, I probably wouldn't seem as bad. It wouldn't be as tough a blow. It wouldn't feel like it's a personal comment on me as to, you know, sort of like how bad I must be to be able to get this insurance and have to have it doubled. Moving away from that a little bit, we've got things like guaranteed versus reviewable premiums. Now, something I always do with my clients, I say from the start, I'm going to give you the best. I'm going to give you that income protection policy that is really, really up there. And I'm always honest and I say, and I will guarantee that if you speak to someone else or if you look online yourself, you will see cheaper options. And there are reasons that I'm not choosing those cheaper options for you. Ideally, we want to have guaranteed premiums. We're locking it in place. It's going to be in place for some people for the next 30, 40 years of their life. Absolutely brilliant. So if you're looking at something like that, though, and you're seeing the reviewable premiums, or your clients and say, well, why aren't you doing this for me? A good example is to show them what the premiums are projected to be over time. And I did this with somebody, and it was a really, really interesting and very much a standout sort of like case for me in a sense. And I showed them the guaranteed premiums over time, and I showed them the reviewable premiums over time. And the difference was £90,000. It was £90,000 more expensive to go with the reviewable option. It might be for whatever reason that still needs to be the right option for the client. Maybe, like we said at the beginning, with that budget and everything, that person cannot go for the guaranteed premiums, but the reviewable they can do. You must work and adapt to your clients, but there are certain things where it's a case of, you know, like, we really want to achieve this, we want to do that. Let's just have a look at all these different options so you can see that I'm doing the best for you and I know my stuff. Always remember, if you're speaking to somebody, especially with income protection, you should be putting reviews in place. People change jobs, their sick pay changes, their salary changes as well. You might be able to use things like guaranteed insurability options to increase that monthly benefit for them without going through all the underwriting again, which could be perfect, especially if they have, since the original application, developed some kind of medical condition or started doing something that means that the insurer sees them as a higher risk. And quickly moving on from that as well, do watch out for the RPI. RPIing, so putting increasing income protection cover in place, is the ideal. That's what we really want to do because we want to offset against the rate of inflation. But what happens if that client's salary doesn't increase? If you've done max benefit percentage for that client, brilliant, RPI, fantastic. But then you get to next year and that premium, that sum assured, is going up for that year. However, their salary hasn't. So the insurer's always going to pay to that max percentage. So at that point, they're overinsured. They're paying a higher premium for something that the insurer is not going to pay for that higher amount. So it's really important, especially on your increasing income protection clients, to make sure you're reaching out to them. Has that salary changed? Is it still meeting that percentage requirements that the insurers are saying? And make sure you change it as soon as possible. And then the last thing in terms of the general tips is just make sure that people are aware that the claim doesn't necessarily happen overnight. So we do have our deferred periods in place. We can be going from 1 week all the way up to 52 weeks. There's so many different ways that we could be doing it. And the insurer does have to assess that application. It does take a bit of time because they're going to need to see the reports from the GP. They're going to need to establish what your terms were when the policy was set up, because obviously terms do change over time with insurers, and it can take a little bit of time for it to be processed. But there's lots of advisors and lots of people in the industry doing everything possible to try and bring that time frame down. And just a really quick little sort of like tip with this as well, in terms of those claim periods. If you're speaking to somebody who's a director of a business, you must be speaking to them very, very quickly and early on to say, if you need to make a claim on this policy, your income needs to end. One of the things that I sometimes see is that people have had these kinds of policies set up. They're a director, they've been given it on a 6-month deferred period because obviously the premium's much nicer. Why wouldn't you? However, they have that conversation then of saying to them, right, okay, so we need to stop taking your income for 6 months. And it's not being explained to them. And that provides a lot of issue. It's obviously a massive issue for the client. It's a big complaint risk for the advisor as well, because ultimately it is your responsibility to say to them, if we take this deferred period, you need to make sure you're financially secure for that time. And if you're a director, even more so than anybody else, that income has to stop from your company. So now we're going to be talking about the exclusion side of things. So I've always talked about like this something known as a 3 strikes rule, where basically if you've got 3 risks, then you're out kind of thing when it comes to income protection. Insurers have been doing a lot to try and improve the amount of options they can give to people if there are going to be exclusions. But we are at a point where about 3/4 of the insurers in the income protection market in the UK will not be able to offer income protection to somebody if they do have 3 risks. Now, well, 3 or more risks, depending upon the insurer. So that could be that there's 3 health conditions. It could be that there's 2 health conditions and then a sport or something else that means that, that they've maybe got a loading of some sort. And it can really end up being a situation where it very quickly moves from, yes, I can do this straight away and I can get this sorted for this person, to then, oh no, I need to really be looking at more sort of ones that can do quite a bit more in terms of a bit more flexibility in the underwriting. And that comes back to the thing of, again, of very early on, just do those quick questions as well. Any health conditions, any high risk sports, are you travelling extensively, anything like that, and get that information from the start so that you don't waste your time when you're doing this research and options for your clients. So some common exclusions that most people are aware of are things like your back and mental health. Back and mental health are the main claims areas when it comes to income protection. So if you have it already, it can be quite difficult for people to obviously get those things covered for at least a certain period of time since last symptomed. Also things like recent injuries, a bit of repetitive strain injury, things like that in the last year or so could end up with an exclusion for, say, like the risk that is relevant to that. We might also have things like price increases. So you might have there is maybe a mental health condition, it's maybe been isolated, it was a bit time ago, so the insurer might go, well, actually we'll increase the premium rather than just saying that we're going to put a full exclusion on there, which is really, really positive. In terms of declines for income protection, so not always, but we'd usually see declines for things like chronic fatigue syndrome, things like Ehlers-Danlos syndrome, strokes, heart attacks, and BMIs over 45. So there's lots and lots of things going on there. You do have as well that you can get insurance for people where you maybe didn't think that you could get insurance for them. We're at a point where people living with HIV can get income protection now potentially at standard terms, which is fantastic. We're also now seeing options for type 1 and type 2 diabetes, which is something we've certainly not had for a very, very long time. So they're sort of like emerging in the market, which is absolutely brilliant, because there are a lot of people living with diabetes, and before it wasn't even an exclusion option, it was just like a no or, well, it was just a no before. So now we do have those options as well. Really important to be mindful on the mental health side of things as well. So this is moving ever so slightly towards the claim side. Stress. There's been a big discussion in our industry, huge discussion between insurers and advisors, where we've been sort of like challenging the concept of what stress is and what it means. And ultimately, what you can find is that some insurers class stress as a symptom rather than a condition. Not all of them, but some of them will do. So when you are speaking to people and you're talking about these different options as to how they can claim, it is worthwhile being very mindful and knowing that what your insurer that you're choosing will be saying in terms of how they would be handling stress. It is one of the biggest reasons that people take time off work. So really do be mindful of that. We then have things like awaiting investigations. So many of you will have experienced this, where there's some kind of investigation that's coming up that the insurer is saying, we just want to wait until that's done. And at the moment, it can even be things like, if there's going to be, if we're close to when a diabetes checkup is happening, things like that, it might be they say, let's just wait until that's happened, potentially. But it could be other things like a lot of people now are trying to get their adult diagnosis of neurodiverse conditions like autism and ADHD. And we're seeing a lot across all the insurance products where an outstanding investigation for ADHD can postpone the outcomes in terms of the insurance. And those timeframes of getting that diagnosis is quite long. So when you do have that situation, we just need to say, to people, we're really sorry, but unfortunately, until this investigation is done, we're going to need to look at certain alternatives. But as soon as this has happened, we will be immediately straight into looking at the full income protection options for you. And bearing that in mind as well, thinking that kind of like nicely goes on if there are exclusions such as back pain and mental health, things like that, is when you are setting up these policies and you're getting the terms for your clients, if an insurer says there's an exclusion, we'll say to them, so when can this go? Immediately, right, okay, well, we've got an exclusion on for the right wrist due to repetitive strain injury. Okay, then, right, so when can you take it off? And insurers at first can sometimes be like, well, what do you mean? You just go, well, when will it no longer be there? When's it no longer relevant? Assuming, obviously, that there's no further issues with that wrist and things like that. And you'll usually get a time period of saying, oh, well, in 2 years, or in this, or in that. And it's really important to keep an eye on that and then set an appointment to go to the client. Right, we're going to speak again at this point because I'm going to be doing the best job for you. And my best job is not to just do this now and then go away, but to keep helping you going forward. So we're speaking at this point, and I'm going to be trying to get that exclusion done for you as well. So now on to vulnerable clients, sensitive conversations. There are going to be times that you will speak to people with a vulnerability, and a client's vulnerability can range from so many different things. It can be the recent diagnosis of a condition. It could be the recent diagnosis of a partner or a child. It could be divorce. It could be loss of a job. It could be, and this might sound strange, it could be actually the family growing because it's an extra mouth to feed and we're not going to need to really be on top of that. So that kind of presents sometimes a financial vulnerability in itself. So many different factors there. And it's just really important to be aware of what your compliance says to you in terms of this is what we consider to be a vulnerable client. These are the steps that we would want you to be doing. But in terms of sensitive conversations, there are times that we need to really put ourselves obviously always in professional mode, but we have to sort of take away a little bit of a barrier in ourselves. We need to get a little bit more emotion in what we're doing and realizing that, the person that we're speaking to, they are not a number, they are a person. Other sensitive conversations you can have are where there are language barriers in place. Obviously, there are many, many people living in the UK from all different nationalities and with different levels of English ability. And actually, not having English as a first language can be seen as a very specific vulnerability when we're looking at supporting people. So what we would need to do at this point is obviously try and establish how much they can understand, how much they're following when we're chatting to them, how much do they remember in the next conversation. Definitely speak to your to your compliance person. Absolutely speak to your compliance person, establish what they would need. But usually what we'll be doing is maybe trying to see if we can have some kind of person there, family member who does really understand English, who can maybe help with some of the translation to make sure that the client feels comfortable. But that is going to be completely led by what your compliance officer says. And also bear in mind as well, as an example, so somebody who is deaf, their first language is British Sign Language, so English would be a second language to them. So it's very, very different. And what you can do is obviously possibly try and take steps to find somebody who is a British Sign Language interpreter who can act on their behalf and act on your behalf. It might be that they're happy to converse by email. It might be that they're happy to do a video call so they can read your lips. So just make sure you try and adapt as best as you can for your client. And ultimately, as well, in terms of some sensitive conversations, in terms of vulnerable clients, in terms of anybody, there are times that you're going to need to walk away from making a recommendation because it just isn't right for the client and it isn't right for your rules. Back to you, Andrew.
Thank you for that, Kathryn. Now, our last session today is arguably the most important of the week. We're looking at claims, and specifically, we're going to focus on what can be done to make the process as smooth and effective as possible for your client. We know that the vast majority of IP claims are paid, but we also recognise the reality that some are not, and also that some of those that are paid can still leave both advisors and clients frustrated at the time things have taken to receive payment. Therefore, we're delighted to have two people at the front end of paying claims with us today. Jackie Kerwood, Head of Claims Strategy and Governance at Aviva, and Robbert Higgins, Claims Manager at Cirencester Friendly, to talk about their experiences and share their ideas for how we can make things work in the best way at the most important time. So hopefully not the hardest question I'm going to ask you today, Jackie and Rob, but maybe if you could start, Jackie, by describing exactly what you actually do beyond the job title. What does a typical day for you look like?
Yeah, so a lot of the purpose of my role is to make sure that we're making the right decisions on claims, and we're doing that as effectively as we can. So whilst we're managing the risk that we need to manage, we're actually making sure we've got customer journeys that work for our customers, and also added kind of benefits that customers get when they claim, making sure that we're there for them to do a little bit extra, as well as making sure our products are performing the way they should be and feeding into that continuous kind of control cycle into underwriting and products so that we can offer really the best service and the best products to our customers.
That's great. And for you, Rob?
Yeah, thanks for having me. I'm the claims manager in Cirencester Friendly. Really, my role is about making sure, very similar to Jackie, about what that customer journey looks like. It's that experience from start to end. We know when someone comes into claim, it's perhaps their most vulnerable point and when they need us the most. So really, we look at our processes and everything we offer the client or the customer from beginning to end, whether that's an intervention and whether some of the added benefits we have, and really the process that we go down to make sure we can assess that claim as quickly as possible, so the member's not left with any doubt that they're going to be supported and they're going to receive that money to make sure they can pay bills and they don't have that worry and stress of not being able to do that. So that's really what my team look to do.
That's great, thank you. So we've got the right people. That's good. We've got the right people to talk about this. So I guess the next question is probably the biggie, or one of the big 5 or so questions we'll have time to talk about today. So from your perspective, Jackie, and what you see, what are the key things that advisors can do to help make IP claims go as smoothly as they can?
Yeah, I mean, there's a few areas. Having the policy set up on the right basis is so important. So selecting the right deferred period, getting the right amount of coverage for the customer. There's nothing kind of more frustrating when a customer comes in really needing that support and they're surprised that actually the product isn't set up on the basis they need it to be. And I think that's why we talk about setting things up correctly, but it's really important it's regularly reviewed as well, because whilst we don't need to know if someone changes occupation or job, often with a change in job, it means that there's a change in potentially, sick pay arrangements or the support they need, the financial support they need. So making sure that product is set up on the right basis. And then misrepresentation is something I know as an industry we talk a lot about. It's giving those customers the time and space to answer the questions they're asked at underwriting and stressing the importance of that. When customers come to claim, the last thing we want to do is basically, as Rob said, not be there for them when it matters. So having that policy set up, both in terms of making the right disclosures at outset, but just having the right deferred period and the right amount of coverage. Those are probably the most important things.
That's brilliant. Thanks, Jackie. And from your perspective, Rob, any things when it maybe then comes to what advisors can do at the claim stage itself, where you see positive or negative things happening?
Yeah, I completely agree with Jackie. We do pay, as you said, a large percentage of claims. So it is a small percentage we're looking at where advisors could do a lot more, I think. And Jackie's right, it comes down to the application and the actual starting of the contract, but that consistent renewal and review of whether that contract fits the member's needs. We have a lot of claims whereby they don't perhaps get their full benefit, and that's because the contract has not been reviewed with the advisor and the member or customer at heart. So, the misrepresentation element is quite a small percentage of what gets declined. A lot of the stuff that we do pay, it's either because there's been continued income from an employer or from a director, they continue to pay themselves, or their cover is not fit for purpose. They need more or they're earning less, or whichever that might be. They need to make sure that they are protected, and ultimately advisors, if they're having those reg reviews with their customers, that can help fill that gap and fill that void.
That's really interesting. And I know both Cirencester and Aviva have done claims reports and are increasingly doing that in a much more helpful way than just a statistics-based thing. So interested, Rob, maybe if you start on, I know you've spoken there a bit about misrep and putting it into the context, but what are the kind of things that you see and almost the frustrations you have maybe years down the line of how this has come to be and ideas you would have for improving that?
I think the frustration we have with misrep is sometimes there's a lot of information that is partially disclosed and we don't get the full picture. So, when advisors are taking out contracts or policies with their customers, are they really going that extra mile to understand that person, that individual? If it's a back exclusion or if it's a potential back exclusion, we need to know everything about the back, and it's making sure that they're answering the questions as thoroughly as possible to make sure that, when we're providing that contract, when it comes to the time of claim where they do need us the most, we're not having to deliver bad news. And then the customer maybe doesn't understand the product they have and what it does for them. And at which point, invariably, that ends up in complaint.
For you, Jackie?
I think probably one of the areas that can be difficult is where customers don't disclose outstanding tests and investigations, and they almost would underwrite themselves to think, I know they've asked this question, but I don't think this is relevant. Question sets across our industry are carefully crafted to get the right disclosure. So if someone is experiencing symptoms, even if they're thinking it's probably going to come to nothing, tell us about those symptoms. And I think not be scared for customers. Advisors to stress to customers, mental health is an area where we see quite a lot of non-disclosure, but the reality is a lot of customers with a mental health condition can still get cover. So they don't need to be scared about telling us about it. We're not expecting a clean bill of health from everybody. Everybody has, had tests, investigations, everybody's had things. Just to answer those questions as honestly, and advisors can give confidence, I think, that it's not unusual to have to answer one of those medical questions in a positive way. It's very typical.
And equally, if you've got a bit of history, it doesn't necessarily mean that will lead to an exclusion.
No.
It might be just one thing, and the underwriters might say, well, that's fine. It hasn't happened in 2-3 years, or, it's something that we wouldn't have an exclusion for. We're not overly concerned about it. We might come concerned about it if it comes to claim and there is a bit of a history that we didn't know about. So it is about, as Jackie says, just being as honest and open and upfront at the beginning to prevent any issues, because equally, it's not just about whether it would impact the claim, it impacts the time frame that it takes to deal with it, because then what we're having to do is to get medical evidence to maybe see if there was an issue or there should be an exclusion on a contract, where actually it's fine, but it's just meant that for 3 or 4 weeks we're waiting for a GP response and we're waiting for underwriters to review that information, and it just all adds for a smoother journey if it's all done properly at the onset.
Yeah, that's really interesting. I guess your point, Jackie, on tests and investigations, that's probably even more of an issue today with delays in the NHS and stuff like that, and the risk of, as you say, self-underwriting.
Yeah, and I think we talk a lot about medical misrepresentation, but of course in income protection, accurately telling us what your occupation is really important as well. So, we talk a lot about medical misrepresentation, but actually income protection covers particular occupations, and it's really important that customers and advisors, help them to find the job that's most suited to the role that they do, so that we can understand how to set that policy up. And I think actually as insurers, we can probably do more to make it easier for someone to describe exactly what their job is and what they do on a day-to-day basis.
Yeah, no, that's good to hear. This is a bit of a sidetrack, but I think it's one of the things I wanted us to talk about today. You may have different views, but I think so. Jackie and Rob and many other people from claims teams are part of our claims and underwriting work streams that we have at the IPTF. And one of the things we've talked about this year is where almost can IP be described as the product that pays when you get a sick note? I think there's discomfort from all insurers in this regard. To be clear, anything that you guys say isn't kind of an exclusive view on that. But can you just maybe starting with you, Jackie, describe what some of the challenges that come with that kind of oversimplification around what IP is?
Yeah, so the sick notes that we'd refer to that GPs sign, they're really done with a different purpose in mind. They're often for state benefits. They often will not be enough for us to see whether someone's illness is preventing them from carrying out their specific occupation. So we will often need more medical information than just a sick note. So in itself, it won't be enough. And I think if we are describing it as a policy that pays out when you get a sick note, that will lead to customers having an expectation that their claim will be paid immediately. And that is not good for our industry as a whole. We want people to trust us. And if they feel they've been told something and that has not happened, in reality, we've gone for additional medical information. Maybe it's taken a bit longer than just producing a sick note. So yeah, I think it's important that we face into those sorts of things so that we can generate trust. And yeah, it is a misconception that just a sick note is going to be sufficient.
I presume.
I'm going to put a fly in the ointment in a way, because at Cirencester we do tend to accept medical sick notes as a means for them being off work medically. Yeah. However, it does come with a caveat, as these things always do. Depending on the injury and incapacity, we will go and get some more medical information to really understand what that is. But ultimately, a broken arm's a broken arm. So there has to be an element of, yes, we want to make sure we wean out the ones that might need a bit more investigation. But ultimately, if it's a straightforward incapacity, if we've got the financial information, we will look to pay and honour that claim. And then we might go and get medical information later down the road if it's a longer term illness and injury.
Yeah, I was going to say, and I guess that's some of the reality of the nuance, which we don't have time for today, of shorter deferred periods and longer deferred periods and things like that go on. But yeah, it is interesting, isn't it? I can well imagine as a customer that would be the kind of phrase I'd remember from rather than anything that's written in a key features document, or all the other things that we.
Yeah, and I think, we would also pay some claims based on that, but I think setting an expectation that all claims would be paid on a sick note is, not accurate.
No, agreed. So moving on to some of those difficult cases that you have where claims either aren't paid or while decisions are waiting to be made. So starting with you, what kind of things, how do you work with members in your case, policyholders in yours, where through that period where a decision is going to be made, do people still have access to services or benefits through that period, or how does that process work?
So they do still have access to all the benefits that we have within, ultimately they'll still remember whether their claim's been admitted or not. It's still under assessment, so they do have access to that, and we'll use sort of some proactive intervention to offer some physiotherapy, perhaps, if that's what the member might need. But the key for me is to keeping the member informed, or our customer informed, and equally keeping the advisor informed. We do a lot of work with our advisors now to tell them when there's been a claim presented, and to tell them what the outcome is, and try and find out if the member wants to consent to have them along the journey with us. So that's all around helping them understand the product they have, helping them understand where they are on the claims journey, and helping them understand what barriers we might have to work with them to make it a claim that's where we can make a decision as quickly as possible. But yes, we can certainly do all all the added services that we currently offer whilst that assessment's taking place.
For you, Jackie?
Yeah, so in terms of added services that are set up as part of the policy, obviously the customers can access those. And something that we're really keen to do is that customers, regardless of the length of their deferred period, contact us as soon as they are off work, because we can offer early intervention within that deferred period. You know, we have lots and lots of customers that will be off work. We will provide rehabilitation support within the deferred period. They may they may be back at work before the benefit would have been due. But for them, their life has got back on track, and, you know, work is good for us. And, you know, we don't like to believe it, but it is. So actually anything we can do within that deferred period, it's not a case of just waiting until that's up. So we will be actively looking whether we can provide things like physiotherapy, counselling, support dealing with illness, support tailoring their work requirements around their disability or illness. So yeah, it's really important customers engage with us.
I think that's a critical point, isn't it? Is that if you don't deal with customers' claims often as an advisor, that not wait until the end of the deferred period. Once you're aware of it, then let the insurer be aware of it.
I think that's your perfect claim, isn't it? You know, someone that's got a long deferred period contacts you early to say there's an illness, an injury they're struggling with. You provide them with intervention, and they never have to claim. You know, there's a lot of evidence out there to say that the quicker you intervene with things, the quicker that members go and people go back to work. Now, there's a reason why we want to intervene with those members. It's not because it's about our bottom line. It's about actually it helps the members get back to work and get back to the life they want to get back to. And as Jackie says, you know, most people do want to work. So if we can help them in any way, then obviously it helps us in terms of, it does help the bottom line, but also it does help the member get back to work, which is obviously what a claims team's here to do.
Yeah. I guess continuing that positive theme. So most people want to get back to work. Most claims are paid, and most claims assessors like paying claims, contrary to, you know, belief in some places. So maybe to kind of, as we come towards the end, Jackie, can you talk about a claim that you've been involved with in the last 12 months where, you know, you feel particularly proud of the difference that you and the team at Aviva have been able to make? Yeah,
so I'm really proud of what our claims team do every day. You know, they're dealing with difficult circumstances, but actually it's the support on income protection. It's that relationship they will often build up to fully understand what's important to a customer, and how we can help them to get their kind of life back on track or deal with an illness. And we've got one story that really stands out, and it was a gentleman called Mick, who he had some back injuries, musculoskeletal injuries, and he was struggling to work. But actually, it wasn't just a bad back for him. The fact he was in constant pain, he started to struggle with his mental health. He started to completely lose who he was. And we were able to put him through like a rehab program. And when we hear him talk about the difference it made, it was huge to him. He said that having the financial payment allowed him to have some self-respect, make him feel that he was supporting his family, not feel as useless as he might have done. And the rehab that we provided kind of enabled him to do some work. And the key thing for him was he was passionate about playing football. He was an older gentleman, and the fact that he couldn't do that anymore had really taken away part of his identity. So we introduced him to walking football, and that just made his social life again, helped deal with the mental health, just getting out there and doing something and being part of a team. So I think it isn't one of those big claims that sometimes we see, but the difference just on that claim it made to that individual, his family, was huge. And it really stuck with me that the difference that the little things we do can make a huge difference to someone's self-worth and how they feel about themselves.
That's great. Thank you. Rob, similar question to you.
Yeah, thank you. I mean, again, the claims team do fantastic. Our claims team do fantastic work day in, day out, and you know they deal with really challenging conversations. I'm sure in both Jackie's world and mine, you know, that could be from a very basic slip or trip to someone that's got a terminal, life-changing illness. So, you know, those guys on the front line are really doing amazing work. One story that sort of fits out of me, we've shared it actually recently on sort of social medias, Anne's story. is a lady that came into claim following a fall from a horse, has a family, ended up in A&E, ended up off work, and really her worries was it wasn't a life-changing injury. She had a driving licence taken away from her for a period of time and was unable to get her son to and from swimming meets, and her son is a high-level swimmer. So it was almost, yes, the IP claim was one thing, but actually we went that little bit further, and we have a foundation called the 125 Foundation, which is available to members, whether in claim or not, to just provide a bit more support. So what we did with that is we, first of all, offered a bit more extra funds outside of the IP element to say, we'll pay for your son's taxi fares to get to and from their swim meets while you're unable to drive. And then actually we've ended up sponsoring her son with some swimming stuff that he's doing. He's actually on the GB team for swimming of that. So and it's similar to what Jackie said, it's the impact it has on the family. And you sometimes forget you're just paying this money, and it is a claim, it's a piece of paper, and it's, I've accepted that claim and I'm paying that amount of money. The impact we are able to have on someone's life, on the family's life, it's really, really powerful. And we're paying a high percentage of these cases, and these people have that protection from us, which I think is a really positive thing.
Yeah. And I know both Mick and Anne, there's videos or social content, obviously we'll make sure at the end of today we put that up so that people can find out more and reuse that, because I think, I'm sure there'll be people clamouring to be able to share those stories. That brings us to an end for that. So thank you very much for your time today. To all of you, please don't forget to register for tomorrow's session if you haven't already. It's Friday, so as tradition dictates, we'll be live in the studio and have a focus on client reviews and how to consider IP at that point in the process, whether your client already has income protection or doesn't, as well as drilling into value-added services. We've an absolutely stacked guest list with a range of top advisors to highlight actions that can be taken to ensure that IP continues to grow and support more individuals, families and businesses. And one final reminder, please do share your key takeaways, what you're enjoying and what you'll do differently because of IPAW this year on socials. Remember to tag the IPTF and use the Because of IPAW and IPAW 2024 hashtags, as we love to see and share what you're all up to. So with that, I'll see you at midday tomorrow for more, and bye for now. Thank you.